After years of inaction bordering on dereliction, it's time for the Senate Banking Committee to act on Title VII before potentially irreparable and self-inflicting harm is done to our economy. Unaddressed end-user margin requirements could lock up billions of dollars that would otherwise be put to productive use, dollars that could go to hiring new employees. This bill, the Business Risk Mitigation and Price Stabilization Act of 2013, is a jobs bill. Without this bill, company treasurers complying with new margin requirements will have to pull money from somewhere, choking off funding for other business operations. And these businesses, by definition, are those that only use these tools to avoid risk, not for speculation. These businesses do not pose systemic risk. They didn't contribute to the crisis of 2008. Yet, going against what Congress intended, regulators are roping them in. I hope this bill passes with a large majority so it cannot be ignored by the Senate.
Gentleman, another 30 seconds.
Additional 30 seconds for the
Thank
gentleman.
you, Mr. Chairman. My constituents in Illinois need this legislation. Our farmers and manufacturers, big and small, have voiced their clear support. Thank you to the sponsors of this legislation, Mr. Grimm and Mr. Peters. Thank you, Mr. Chairman, and I yield back.
Gentleman yields back. Gentleman from Michigan.
Madam Speaker, I have no further requests for time from the Financial Services Committee and yield back the balance of my time to allow the Mr. McIntyre from the Agriculture Committee to control the rest of the time.
Gentleman yields back the balance of his time. Gentleman from North Carolina is recognized.
Thank you, Madam Speaker. I rise today in support of this bill, of which I'm a strong supporter and lead co-sponsor, H.R. 634, and would like to thank my colleagues, Representatives Hensarling, Grimm, Peters, and Scott, for their commitment to working together on this, as you've heard in the discussion that has occurred thus far. This bipartisan bill is a prime example, something our nation's yearning for to see here in Congress, that members can and will work together when we need to find solutions that we can come across the aisle and reach them quickly. The Business Risk Mitigation and Stabilization Act will clarify that true derivatives end users are exempt from the margin requirements supplied by the Dodd-Frank Wall Street Reform and the Consumer Protection Act to many derivatives contracts. These true end users use derivatives to manage actual business risk and protect against fluctuating prices, currency rates, or interest rates, not to speculate. Margin requirements would place undue burden on responsible end users, not only back home in eastern North Carolina, where I'm from, but also, indeed, across the country. Our farmers, agricultural co-ops, community banks, all use financial products to mitigate risk, provide security for their businesses, and maintain prices for consumers. By removing margin requirements, this bill will free up capital, something we all hear about that our small businesses are screaming for, free up capital and allow businesses to plan for the future, shield these plans from risk, and provide certainty needed to create American jobs. And those battle cries of freeing up capital and providing certainty are something I know all of our colleagues on both sides of the aisle can agree on. We do want to help with jobs and small business. In the previous Congress, the House overwhelmingly passed an identical bill, as has been mentioned earlier, and it's my hope that this House will again pass this important bipartisan legislation today and send a strong message that Congress can and will work together to pass common-sense solutions that protect our businesses, our farmers, our cooperatives, and others from burdensome and misguided regulations. With that, I reserve the balance of my time. And
gentleman reserves the balance of his time. Gentleman from Texas.
Madam Speaker, I now yield 3 minutes to the gentleman from Georgia, Mr. Scott, who is the lead co-sponsor of this bill from the Agriculture Committee.
Gentleman from Georgia is recognized for 3 minutes.
Thank you, Mr. Chairman. And Madam Speaker, I rise today in support of H.R. 634, the Business Risk Mitigation and Price Stabilization Act of 2013. And I, too, would like to thank many of the members on the other side of the aisle, as well as mine, and specific Mr. McIntyre from North Carolina for his work on the Ag Committee on this piece of legislation. This bill clarifies congressional intent by providing a clear exemption for non-financial end users that qualify for the clearing exception under Title VII of the Dodd-Frank Wall Street Reform and Consumer Protection Act. Across the country, consumers and businesses alike are confronted with risks that are associated with their day-to-day operations. To manage these risks, business use over-the-counter derivatives to provide price certainty. Consumers, in turn, benefit from these risk management practices through lower volatility in the day-to-day prices of the goods and services that they purchase. By passing this legislation, Congress is providing a specific exemption from clearing and margin requirements for businesses and individuals who are not financial institutions. This accounts for less than 10% of the capital of the derivatives markets. It relieves the burdensome regulations and keeps the U.S. economy moving. This balance protects the consumer while providing a pro-growth environment for business. To further the initial goals of H.R. 634, it clarifies Congress's intent of keeping much-needed capital in the U.S. markets, which plays an important role in our country's continued economic growth. I'd also like to reiterate the fact that last year Congress passed this same piece of legislation 370 to 24. For this reason, I ask my colleagues to support H.R. 634 so that businesses and individuals may benefit from the day-to-day risk management practices that this will provide. Madam Speaker, I yield the remainder of my time.
Gentleman yields back. Gentleman from North Carolina.
I reserve the balance of my time.
Gentleman from North Carolina reserves the balance of his time. Gentleman from Texas.
Madam Speaker, I now yield 2 minutes to the gentle lady from Missouri, Ms. Hartzler, also a member of the Agriculture Committee.
Gentleman recognized for 2 minutes.
Thank you. I rise today in strong support of H.R. 634, the Business Risk Mitigation and Price Stabilization Act of 2013. This bipartisan, common-sense piece of legislation is critical for commercial end users like farm credit companies and rural electric cooperatives to be able to use swaps to manage their long-term risks. Earlier this year, I introduced H.R. 2136, the Small Business Credit Availability Act, to address this very issue. And I'm pleased that my colleagues have put together this important legislation which addresses the concerns that I have with clearing and margin requirements for rural electric cooperatives. It's important to every family in my district to be able to count on reasonable and stable electric bills without unplanned price fluctuations. This bill ensures that the rural electric cooperatives in my district will be able to manage their long-term risk without the burden of costly clearing and margin requirements that would ultimately be passed on to my constituents. I want to especially thank the chairman and ranking member of both committees for including language ensuring that cooperatives that have clearing exemption are also excluded from costly margin requirements. Dodd-Frank never intended for end users like rural electric cooperatives and farm credit companies to be subject to clearing and margin requirements. Rural cooperatives in my district provide a great service at the lowest rates possible. Requiring these rural cooperatives to post margin on their swaps merely ties up working capital and will unnecessarily lead to higher electricity costs across the U.S. I was pleased to see that earlier this year the CFTC included many of these end users, like rural cooperatives, in their proposed rulemaking on the clearing exemption. I support this legislation's directive to close the loophole by granting margin exemptions to those same entities as well. Again, I support H.R. 634, and I urge my colleagues to vote for this legislation. And I yield back the remainder of my time.
Gentlelady yields back the remainder of her time. Gentleman from North Carolina.
Reserve the balance of my time.
Gentleman from North Carolina continues to reserve the balance of his time. Gentleman from Texas.
Madam Speaker, I'm prepared to close and reserve the balance of our
Gentleman reserves. Gentleman from North Carolina.
We're prepared to close. We have no further speakers, and I do want to emphasize the fact that we have great bipartisan support and would like to see this bill passed right away. Thank you, Madam Speaker.
Gentleman yields back the balance of his time. Gentleman from Texas.
Madam Speaker, I just want to urge all my colleagues to support this bipartisan legislation to bring some relief to end users, promote economic growth and jobs, and make congressional intent clear. And again, I urge all of my colleagues to adopt it. Yield back the balance of my time.
Gentleman yields. All time has been yielded back. The question is, will the House suspend the rules and pass the bill, H.R. 634, as amended? Those in favor say aye. Those opposed, no. In the opinion of the Chair, two-thirds being in the affirmative, the rules are suspended. The gentleman from North Carolina.
Yeah, I'd ask for the yeas and nays.
The yeas and nays are requested. All those in favor of taking this vote by the yeas and nays will rise and remain standing until counted. A sufficient number having risen, the yeas and nays are ordered. Pursuant to Clause 8 of Rule 20, further proceedings on this motion will be postponed. For what purpose does the gentleman from Arkansas seek recognition?
Madam Speaker, I move to suspend the rules and pass Bill H.R. 742.
The clerk will report the title of the bill.
H.R. 742, a bill to amend the Securities Exchange Act of 1934 and the Commodity Exchange Act to repeal the indemnification requirements for regulatory authorities to obtain access to swap data required to be provided by swaps entities under such acts.
Pursuant to the rule, the gentleman from Arkansas, Mr. Crawford, and the gentleman from Georgia, Mr. Scott, each will control 20 minutes. The chair recognizes the gentleman from Arkansas.
Thank you, Madam Speaker. I ask unanimous consent that all members may have 5 legislative days in which to revise and extend their remarks on Bill H.R. 742.
Without objection, so ordered.
Thank you, Madam Speaker. I yield myself such time as I may consume.
Gentleman from Arkansas is recognized.
Thank you, Madam Speaker. I want to thank the other co-sponsors of this bill, especially Mr. Huizinga, Mrs. Moore, and Mr. Maloney for joining me in this bipartisan effort to help bring transparency to the global swap markets. While I may not agree with every provision in the Dodd-Frank law, today I believe we're working towards its bipartisan goal of giving regulators the tools they need to improve systemic risk mitigation in the global financial markets. I think everyone agrees that the lack of transparency in the over-the-counter derivatives markets escalated the financial crisis of 2008. In order to provide market transparency, the Dodd-Frank law requires post-trade reporting to swap data repositories, or SDRs, so that regulators and market participants have access to real-time market data that will help identify systemic risk in the financial system. So far, we've made great strides in reaching this goal, but unfortunately a provision in the law threatens to undermine our progress unless we fix it. Currently, Dodd-Frank includes a provision requiring a foreign regulator to indemnify a U.S.-based SDR for any expenses arising from litigation relating to a request for market data. Unlike the rest of the world, the concept of indemnification is only established within U.S. tort law. As a result, foreign regulators have been reluctant to comply with this provision, and international regulatory coordination is being thwarted. While the intent of the provision was to protect market confidentiality, in practice it threatens to fragment global data on swap markets. Foreign regulators would be forced to create their own SDRs, resulting in fragmented global data framework where regulators would be unable to see a complete picture of the marketplace. Without effective coordination between international regulators and SDRs, monitoring and mitigating global systemic risk is severely limited. H.R. 752 fixes this problem by removing the indemnification provisions in Dodd-Frank. This legislation has broad bipartisan support and was unanimously approved by the House Agriculture Committee in March and the House Financial Services Committee in May. Additionally, last year the SEC testified to the Financial Services Committee that a legislative solution was needed, saying, quote, "In removing the indemnification requirement, Congress would assist the SEC as well as other regulators in securing the access it needs to data held in global trade repositories," end quote. Many other U.S. and foreign regulators have echoed these same sentiments. If left unresolved, the indemnification provision in Dodd-Frank has the potential to effectively reduce transparency in the over-the-counter derivatives markets and undo the great progress already being made through the cooperative efforts of more than 50 regulators worldwide. In passing this legislation, we will ensure that regulators will have access to a global set of swap market data, which is essential to maintaining the highest degree of market transparency and risk mitigation. I strongly urge my colleagues to vote yes on this bill, and with that I reserve the balance of my time.
Gentleman reserves the balance of his time. Gentleman from Georgia.
Yes, Mr. Chairman. First, I ask unanimous consent to yield 10 minutes of my time to Ms. Moore of Wisconsin, who's done a tremendous job on this issue, and that she be allowed to control that time.
Without objection, so ordered.
Thank you so much, Madam Chair, and thank you, Mr. Scott, for yielding the time. And I yield myself such time.
With the gentlelady suspend, the gentleman from Georgia is still under recognition.
Yes, I should have been a little more clear. After I
was a little eager, Madam Chair.
Gentleman from Georgia may proceed.
As I said, you can see she's done a tremendous amount of work on this, and she's very eager, but she's done a great job. And she'll be recognized as soon as I give my opening statement here. And I want to thank you, Mr. Speaker, Madam Speaker. And I rise today in support of H.R. 742, the Swap Data Repository and Clearinghouse Indemnification Correction Act, which has been sponsored by my colleague and good friend, Representative Crawford from Arkansas, and it's been a pleasure to work with him on this. And I'd like to strongly urge all of my colleagues to vote in favor of this bill. H.R. 742 is a non-controversial and it is highly bipartisan, shared by both Democrats and Republicans alike. It passed the Agriculture Committee by voice vote unanimously, and it passed the Financial Services Committee by unanimous vote as well, 52-0. Madam Speaker, Dodd-Frank ushered in a new era of financial marketing, reporting, and transparency requirements, which was very much needed, in order to aid regulators by providing insight into what were once very opaque markets and to facilitate information sharing between and among United States and international regulators. These were very laudable and necessary changes that were welcomed by regulators and market participants alike. And Dodd-Frank also included a provision requiring that in order for the gathered transaction information to be shared, that the SEC and the CFTC or a swap data repository be indemnified against accidental release or misuse of information. Unfortunately, Madam Speaker, this indemnification provision is having an unintended consequence, an unintended effect of preventing data collection and information sharing, particularly when international transactions and international regulators are involved, because indemnification is a legal concept unique only to the United States. So H.R. 742 would very simply remove this indemnification requirement as requested by United States and foreign regulators and swap data repositories, so that we can realize the level of global information sharing that is so critical to monitoring systemic risk. So, Madam Speaker, as I said, I strongly support this very simple but necessary bill that will help to facilitate greater information sharing as intended by Dodd-Frank, and I encourage my colleagues to do the same. And I thank you, and I reserve the balance of my time.
Gentleman reserves the balance of his time. Gentleman from Arkansas.
Thank you, Madam Speaker. I would like to yield 3 minutes to the gentleman from Michigan who was the lead co-sponsor in financial services on this bill. Gentleman from Michigan, Mr. Huizinga.
Gentleman from Michigan is recognized for 3 minutes.
Thank you, Madam Speaker, and I appreciate that from my friend from Arkansas who's shown great leadership on this issue. Well, Madam Speaker, thousands of companies across this country and in my state of Michigan utilize derivatives to better manage the risks that they face every day. The proper use of derivatives to lower risk benefits the global economy by allowing a range of businesses from manufacturing, healthcare, agriculture, and a myriad of others to improve their planning and forecasting and to offer more stable prices to us, the customers. By imposing over-the-top regulatory burdens on end users, this could increase costs and reduce liquidity that prevent these companies from using derivatives markets efficiently, effectively, and properly. That's why I'm a proud sponsor of H.R. 742, the Data Swap Repository and Clearinghouse Indemnification Correction Act. Quite a mouthful, but an important piece of bipartisan legislation which unanimously passed both the Agriculture and the Financial Services Committee, a rare feat in Washington these days. And it would remove the unrealistic requirement to secure against future losses, which some have noted is a unique concept to U.S. law. But it would remove these unrealistic requirements imposed on foreign regulators by Dodd-Frank and as a condition of obtaining access to the data repositories that we need to share. Well, in fact, earlier this year, the CFTC and the SEC, the regulatory agencies, issued a joint report on international swap regulation acknowledging the problems with indemnification provisions in Dodd-Frank.
The SEC and CFTC staff report said that the indemnification provisions have, quote, caused concern among foreign regulators, some of which have expressed unwillingness to register or recognize a swaps data repository unless we're able to have direct access to necessary information, end quote. Additionally, the report noted that, quote, Congress may determine what a legislative amendment to the indemnification provision is appropriate, end quote. Well, folks, despite opposition from the Secretary of the Treasury and the White House, here is the bipartisan answer to this problem. And we're glad to see that people on both sides, right, left, and center, have all agreed that this is a proper, measured step to solve this issue. And as you can see, this legislation solution is small. It's a technical fix to the Dodd-Frank Act, but it's desperately needed and is vital to maintain the integrity of domestic and global derivatives market regulations, and I urge swift passage of H.R. 742. Thank you, and I yield back.
Gentleman yields back. Who seeks time?
Madam Speaker, I'm seeking the time that Mr. Scott yielded to me before.
Gentlelady from Wisconsin controls 10 minutes. Gentlelady's recognized.
Again, I do want to thank Mr. Scott and thank you, Madam Speaker, for recognizing me. I yield myself such time as I might consume.
Gentlelady's recognized.
I am so delighted to be the lead co-sponsor on the Financial Services Committee and on the Democratic side of this critical legislation. However, I do want to thank all of my colleagues on both the Ag Committee and the Financial Services Committee for their leadership and support on this nuanced but important legislation. It really took the hard work of a bipartisan group of members and staff to get this bill to this point. H.R. 742, the Swap Data Repository and Clearinghouse Indemnification Correction Act, strikes the mandate that the global regulators indemnify U.S.-based SDRs and regulators from liability in order to access swap trade data in U.S.-based SDRs. Now, Mr. Scott and Mr. Crawford have done a fantastic job walking through the details of this bill. I just want to add, Madam Speaker, that striking this indemnification provision does not compromise the new legal framework for the swap markets enacted in Dodd-Frank, nor does it erode any other important market protections. In fact, H.R. 742 ensures the functioning of the newly enacted swap regime and ability of swap data repositories to function as intended. The bill passed both the House Financial Services and Ag committees without opposition. The bill is supported by consumer advocacy groups as well as business groups. In testimony before the Financial Services Committee, the Securities and Exchange Commission said of the bill, and I quote, "The SEC recommends that Congress consider removing the indemnification requirement added by the Dodd-Frank Act. The indemnification requirement interferes with access to essential information, including information about the cross-border OTC derivatives market," unquote. H.R. 742 ensures information regarding the global swap market will be available to U.S. and foreign regulators, which will enhance the global transparency and oversight of derivatives markets. I reserve my time.
Gentlelady reserves the balance of her time. Gentleman from Arkansas.
Madam Speaker, I reserve.
Gentleman continues to reserve. Gentlelady from Wisconsin.
Thank you, Madam Speaker. I would like to give 2.5 minutes to my colleague, a senior member of the Financial Services Committee, Mrs. Maloney of New York.
Gentlelady from New York is recognized for 2.5 minutes.
I thank the gentlelady for her leadership and for yielding. And this is a very strong bipartisan effort. And I rise today in support of H.R. 742, the Swap Data Repository and Clearinghouse Indemnification Act. In enacting the Dodd-Frank Act, Congress passed the most sweeping reforms to the financial industry in decades in response to the worst economic crisis in our lifetime. The facts are clear. The financial system is global, and as a result, Systemic risk is global as well. We saw in 2008 with the exposure that European banks had to counterparties like Lehman and Merrill, and we see it today with U.S. banks' exposure to European debt crisis. The great equalizer here is data. This is the reason Dodd-Frank created swap data repositories, so that the regulators, domestic and foreign alike, can recognize prospective cracks in the financial armor before they become gaping holes. This is critically important, and we must get it right. Data collection has been one of the issues that I've worked hard on in the past, and I want to ensure that we are doing everything we can to support collaboration and encourage an open exchange of data with our foreign counterparties. Virtually everyone agrees that the indemnification provisions in Dodd-Frank will have the unintended consequence of limiting the extent to which our U.S. regulators share information with well over 50 foreign regulators. That is the complete opposite of the direction that we want to go in. This bipartisan effort to correct a problem in Dodd-Frank is not an attempt in any way to weaken the bill. It is an attempt to make good legislation even better. This bill will go a long way toward furthering a major goal of the Dodd-Frank legislation and reforms, which is sharing data and collaboration with foreign entities to reduce global systemic risk. This not only had strong bipartisan support, but is likewise supported by the SEC. I urge my colleagues on both sides of the aisle to support this important correction, and I yield back.
Gentlelady yields back. Gentleman from Arkansas.
Speaker, I reserve.
Gentleman from Arkansas continues to reserve his time. Gentlelady from Wisconsin.
Thank you so much, Madam Speaker. I am so delighted at this point to yield 2 minutes of my time to someone who was formerly on the Ag Committee and is currently on the Financial Services Committee and understands the importance of H.R. 742, Representative Terry Sewell from Alabama.
Gentlelady from Alabama is recognized for 2 minutes.
Thank you, Madam Chair. I rise today in support of H.R. 742, the Swap Depository, Data Repository and Clearinghouse Indemnification Correction Act. H.R. 742 helps ensure regulators continue to have the transparency in the derivatives markets needed to make the critical decisions to help mitigate risk in our domestic and international financial markets. As we continue to move forward with the implementation process of Dodd-Frank, we must be mindful of the original purpose and intent behind this essential reform. Dodd-Frank was intended to add more transparency and oversight to our financial markets and to ensure that another financial crisis and meltdown would never occur. However, Congress must continue to provide important guidance and oversight of financial regulatory agencies in order to ensure that no unintended consequences associated with these new regulations will run counter to the original intent. That is why I support this bipartisan and common sense technical correction and clarification in H.R. 742. As a former securities lawyer and finance professional, I believe that this bill, by correcting the indemnification provisions that impose burdensome regulations on our foreign regulators, it will in many ways maintain the integrity of our financial markets, and I think it is the right thing to do. While many aspects of the new derivatives market and the entire Title VII regime remain uncertain, I want to applaud the diligent work of both the CFTC and the SEC in drafting and implementing these critically new regulations. Today's vote helps add clarity and clarification to very important derivative reform. I urge my colleagues on both sides of the aisle to vote in favor of this important clarification. I also want to commend my colleagues on both sides of the aisle and my colleague Gwen Moore as well as my colleague David Scott for their leadership on this issue. I urge my colleagues to support this bipartisan piece of legislation, and I yield back the rest of my time.
Gentlelady yields back the balance of her time. Gentleman from Arkansas.
Madam Speaker, I reserve.
The gentleman from Arkansas continues to reserve his time. Gentlelady from Wisconsin.
Thank you so much, Madam Speaker. I You know, I am so pleased that H.R. 742 is before us so that people understand, Madam Speaker, that this process actually does work from time to time. This provision was added at the last minute to the Dodd-Frank bill, was not fully vetted, not fully debated. In a very diligent way, two committees on both sides of the aisle were able to come together and really pull together this very modest but extremely critical, important bill to make sure that there's transparency as well as fluidity in our global, our oversight of derivatives markets. And I'm so pleased to be a part of this remarkable consensus on this indemnification of this bill. I urge all my colleagues to support this critically important legislation, and I yield back the balance of our time.
Gentlelady yields back the balance of her time. Gentleman from Arkansas.
Thank you, Madam Speaker. I just would like to add, simply by passing and enacting H.R. 742, it would send a clear message to the international community that the United States is strongly committed to global data sharing and determined to avoid fragmenting the current global data set for over-the-counter derivatives. And I would urge a yes vote on H.R. 742, and I will continue to reserve.
Gentleman continues to reserve. Gentleman from Georgia.
Yes, Madam Speaker, I have no additional speakers, and so I'd like to close by simply saying a great thanks for the work on Mr. Crawford from Arkansas, Ms. Moore from Wisconsin, Ms. Sewell from Alabama, and Ms. Maloney from New York, in this great show of bipartisanship that will help us to facilitate greater information sharing, which was intended by Dodd-Frank. And I urge passes on this much-needed legislation, and I yield back the balance of my time.
Gentleman from Georgia yields back the balance of his time. Gentleman from Arkansas.
Thank you, Madam Speaker, and I thank the gentleman from Georgia. I would again urge a yes vote on H.R. 742, and with that I yield back. Gentleman
yields back. All time has been yielded. The question is, will the House suspend the rules and pass the bill H.R. 742? Those in favor say aye. Those opposed, no. In the opinion of the Chair, two-thirds being in the
Madam Speaker, I ask for a roll call vote on this, please.
Does the gentleman ask for the yeas and nays?
Yes, yeas and nays.
The yeas and nays are requested. All those in favor of taking this vote by the yeas and nays will rise and remain standing until counted. A sufficient number having risen, the yeas and nays are ordered pursuant to Clause 8 of Rule 20. Further proceedings on this motion will be postponed. For what purpose does the gentleman from California seek recognition?
Madam Speaker, I move to suspend the rules and pass the bill H.R. 1038.
The clerk will report the title of the bill.
H.R. 1038, a bill to provide equal treatment for utility special entities using utility operations-related swaps and for other purposes.
Pursuant to the rule, the gentleman from California, Mr. LaMalfa, and the gentleman from Georgia, Mr. Scott, each will control 20 minutes. The Chair recognizes the gentleman from California.
Thank you, Madam Speaker. I ask unanimous consent that all members may have 5 legislative days in which to revise and extend their remarks on the bill H.R. 1038.
Without objection, so ordered.
Madam Speaker, I yield myself as much time as I may consume.
The gentleman from California is recognized.
Thank you. Madam Speaker, the premise of the heavily bipartisan Public Power Risk Management Act is simple and is one that all members of the House should support. It seeks to keep electricity and natural gas rates from increasing for over 47 million Americans. Those 47 million Americans are customers of over 2,000 publicly owned utilities who have used swaps to manage their risk for years. Unfortunately, the Dodd-Frank Act, though well-intentioned, which was enacted to make reforms to our nation's financial industry, has been used to limit and can do business with a publicly owned utility. For example, in my district specifically, the City of Redding, California, the Redding Electric Utility has been concerned that potential limitations to hedging options in the future could increase the cost to their customers. As well, Grays Harbor Public Utility District, a community-owned nonprofit utility that serves 45,000 customers in Washington State, previously had 20 counterparties with which they could use to help manage their risk. So says Doug Streeter, as Chief Financial Officer. Now, instead of 20, it is down to just 2 counterparties due to overly restrictive rules born out of, I think, an unintentional consequence of Dodd-Frank Act. What we're hearing from the counterparties is abundantly clear that they're worth more to us than we are to them, Mr. Streeter says. It wasn't a big book of business for them. It's just not worth it for them to be designated as a swap dealer. They're not willing to take that on, so they've left the market, unquote, from Mr. Streeter. Of course, this unintended consequence is affecting utilities in congressional districts all across the United States. The results of this limitation are fewer options for publicly owned utilities to manage their risks, which will translate into higher costs for millions of American ratepayers. I was not yet a member of this body when Dodd-Frank was debated, but I think it is safe to say that no one at any point had intended during this debate that it would contemplate in Dodd-Frank that it would lead to higher energy rates for millions of Americans, which is an unacceptable result during a period of tremendous economic uncertainty. This potential outcome can be prevented by sending H.R. 1038 to the Senate today with a strong bipartisan vote. I should note that while my bill seeks to preserve a publicly owned utility's access to cost-effective and customized non-financial commodity swaps used to generate electricity or produce natural gas, it still requires financial swaps to be governed by the new CFTC rules issued under the Dodd-Frank Act, and it requires reporting of all transactions to the CFTC to ensure market integrity. I should also note that my bill has broad bipartisan support. We're very thankful for that from many members, both sides of the aisle, all over the country, as well as broad support by key stakeholders, including the Consumer Federation of America, the Edison Electric Institute, and the United States Chamber of Commerce. I would also ask unanimous consent to insert those letters into the record.
Objection, so ordered.
Thank you. So let's stick up for these utilities and their customers that are simply trying to manage their risk so that they can keep rates low for millions of Americans. So I would thank you, Madam Speaker, and I reserve the balance of my time.
Gentleman reserves the balance of his time. Gentleman from Georgia.
Yes, Madam Speaker, thank you very much. And I rise today to offer my full support for H.R. 1038, the Public Power Risk Management Act, which is sponsored by my colleague from California, Mr. LaMalfa. And I'd like to commend Mr. LaMalfa for his outstanding leadership, because as he pointed out, this is another one of those unintended consequences that we're to fix. Now, H.R. 1038 is a non-controversial bill. It passed the House Committee on Agriculture by a voice vote. And H.R. 1038 seeks to correct an oversight in Dodd-Frank that has hindered the ability of publicly owned utilities to offset their risk in the traditional fashion. Put simply, H.R. 1038 would simply allow producers, utility companies, and other non-financial entities to continue entering into energy swaps with government-owned utilities without danger of being required to register with the CFTC as a swap dealer. What this will do is it will allow these publicly owned utilities to continue using their traditional swap counterparties to help manage their risk related to generation of electricity and the production of natural gas. Now, this is very important, Madam Speaker, because if the law remains as it is without this bill, it is the ability of utilities to manage risk would be hindered by increased costs and could lead to higher energy rates for millions of Americans. And we certainly do not want this to happen. This is something we want to avoid, especially during our still fragile economic recovery. So, Madam Speaker, I support this technical correction to Dodd-Frank, and I urge my colleagues to support it as well. Thank you, and I reserve the balance of my time.
Gentleman reserves the balance of his time. Gentleman from California.
Thank you, Madam Speaker. I would like to yield 1 minute to my colleague from Arkansas, Mr. Crawford.
Gentleman from Arkansas is recognized for 1 minute.
Thank you, Madam Speaker, and I thank the gentleman from California for his leadership on this issue and for the opportunity to allow me to speak in support of H.R. 1038, the Public Power Risk Management Act of 2013. This is a good bipartisan piece of legislation that would simply allow producers, utility companies, and other non-financial entities to continue entering into energy swaps with government-owned utilities, also known as utility special entities, without requiring them to register with the CFTC as a swap dealer solely because of their dealings with government-owned utilities. As a group, public power utilities deliver electricity to 1 in 7 of every electric customer in the United States. Over 47 million people, certainly some in major metropolitan areas such as Los Angeles, San Antonio, Seattle, Orlando, but the vast majority of public power companies serve communities with populations of 10,000 people or less. H.R. 1038 will place utility special entities on a level playing field with everyone else in the marketplace, allowing many of them to keep the same swap counterparties they've used to manage risk for years. Utility special entities should be allowed to keep using swaps to help manage their risk related to the generation of electricity or production of natural gas. To hinder these utilities' ability to manage risk would only increase their costs and possibly lead to higher energy rates for millions of Americans, an unacceptable result during a period of tremendous economic uncertainty. Madam Speaker, I urge passage of H.R. 1038, urge a yes vote, and yield back.
Gentleman from Georgia.
I have no other speakers, Madam Speaker, so I'd like to close, but I would like to say that Mr. Costa, our distinguished congressman from California, expresses his deep concern and support for this legislation, and I certainly wanted to register that on his behalf. And certainly to Mr. LaMalfa and to Mr. Crawford, again, commend you for your outstanding work on this. Wherever we can cut costs and save money for the American people, we need to do it and do it quickly. Therefore, I urge a very quick passage of this very important and timely piece of legislation. And I yield back the balance of my time.
Gentleman from Georgia yields back the balance of his time. Gentleman from California.
Thank you, Madam Speaker. I appreciate, again, how we've been able to come together in such a good bipartisan fashion. I greatly appreciate my colleague from Georgia, Mr. Scott, his kind words and helpful words in moving this legislation today on the floor. So in closing, again, H.R. 1038 seeks to keep electricity and natural gas bills affordable for over 47 million Americans. Our publicly owned utilities should have the access to the risk management tools that they need to keep costs down, a goal that we all share, which prevents utility rates from rising. I ask my colleagues to support this common sense legislation, and I yield back the balance of my time.
Gentleman from California yields back the balance of his time. All time has been yielded back. The question is, will the House suspend the rules and pass the bill H.R. 1038? Those in favor say aye. Those opposed, no.
Madam Chair, I ask for the yeas and nays, please.
In the opinion of the Chair, two-thirds being in the affirmative, does the gentleman request the yeas and nays?
Yes, I do, Madam.
The yeas and nays are requested. All those in favor of taking this vote by the yeas and nays will rise and remain standing until counted. A sufficient number having risen, the yeas and nays are ordered pursuant to Clause 8 of Rule 20. Further proceedings on this motion will be postponed. For what purpose does the gentleman from Florida seek recognition?
Madam Speaker, by direction of the Committee on Rules, I call up House Resolution 256 and ask for its immediate consideration.
The clerk will report the resolution.
House Calendar Number 31, House Resolution 256, resolved that at any time after the adoption of this resolution, the Speaker may, pursuant to Clause 2B of Rule 18, declare the House resolved into the Committee of the Whole House on the State of the Union for consideration of the bill H.R. 1960 to authorize appropriations for the fiscal year 2014 for military activities of the Department of Defense and for military construction, to prescribe military personnel strengths for such fiscal year and for other purposes. The first reading of the bill shall be dispensed with. All points of order against consideration of the bill are waived. General debate shall be confined to the bill and shall not exceed 1 hour, equally divided and controlled by the Chair and Ranking Minority Member of the Committee on Armed Services. After general debate, the Committee of the Whole shall rise without motion. No further consideration of the bill shall be in order except pursuant to a subsequent order of the House. Section 2. Upon adoption of this resolution, it shall be in order to consider in the House the bill H.R. 1256 to direct the Securities and Exchange Commission and the Commodity Futures Trading Commission to jointly adopt rules setting forth the application to cross-border swaps transactions of certain provisions relating to swaps that were enacted as part of the Dodd-Frank Wall Street Reform and Consumer Protection Act. All points of order against consideration of the bill are waived. The amendments recommended by the Committee on Financial Services now printed in the bill shall be considered as adopted. The bill as amended shall be considered as read. All points of order against provisions in the bill as amended are waived. The previous question shall be considered as ordered on the bill as amended and on any amendment thereto to final passage without intervening motion except one. 1 hour of debate with 40 minutes equally divided and controlled by the Chair and Ranking Minority Member of the Committee on Financial Services, and 20 minutes equally divided and controlled by the Chair and Ranking Minority Member of the Committee on Agriculture, and 2, 1 motion to recommit with or without instructions. Section 3. The Chair of the Committee on Agriculture is authorized on behalf of the committee to file a supplemental report to accompany H.R. 1947.
The gentleman from Florida is recognized for 1 hour.
Madam Speaker, for the purpose of debate only, I yield the customary 30 minutes to the gentleman from Massachusetts, Mr. McGovern, pending which time I yield myself such time as I may consume. During consideration of this resolution, all time is yielded for debate only. Madam Speaker, I ask unanimous consent that all members have 5 legislative days to revise and extend their remarks.
Without objection, so ordered.
House Resolution 256 provides the House consideration of 2 separate pieces of legislation. First of these bills is H.R. 1256, the Swap Jurisdiction Certainty Act, which will be considered for 1 hour with time divided between the Committees on Financial Services and Agriculture under a closed rule. Secondly, and the reason why I'm so proud to be sponsor of this rule, House Res 256 provides me 1 hour of general debate for this year's National Defense Authorization Act. The Rules Committee traditionally receives hundreds of amendments to the NDAA, and with just under 300 submitted by the end of the day yesterday, this year is no different. Therefore, as a tradition of this bill, the first rule in the NDAA consideration process provides for general debate, while a second will provide for consideration of a plethora of amendments we have before us. As a member of the House Armed Services Committee, I've had the honor of helping craft this legislation for the past few months. As I think anybody could imagine, when you're talking about a bill that authorizes the Department of Defense, there's a lot to discuss and to consider. That point was illustrated by our full committee markup in the Armed Services last week, which started first thing Wednesday morning and went through to almost 3 a.m. on Thursday, 16 hours. We worked long and hard, and I'm proud of the product we presented to this House for consideration. But for as much time and effort that we on the Armed Services put into the Defense Authorization Act, I know that other members who don't serve on that committee will want to make their mark on this bill too. To ensure the House has the opportunity to really have a comprehensive, free-flowing debate on such an important topic, we've decided to break the rule for Defense Authorization Act into 2 parts. That's why today's rule provides us with 1 hour of general debate time. It gets us started on a path to consideration, It also allows members from both sides of the aisle to have a full discussion about the broader themes running through this base legislation. There are important debates, and the sooner we get them started, the better. But with nearly 300 amendments submitted to the National Defense Authorization Act, the truth is that we on the Rules Committee couldn't give each and every amendment the full weight and consideration it deserves and produce a comprehensive rule that starts debate on the full bill and all amendments today. If something's worth doing, it's worth doing it right. Therefore, while the House works on the Swap Jurisdiction Certainty Act and starts general debate on the NDAA, we on the Rules Committee will return to the committee room, and we'll continue to sift through all the amendments that members have offered on this bill. We want to make sure the House has the opportunity to weigh in on each and every important issue in the NDAA. That's why we need to take our time. And once we have a full understanding of the amendments submitted to the committee, we'll come back with a second rule setting the universe of amendments for this legislation. I know that we all share the same commitment to making this a fair and collaborative process. Quite frankly, it's the spirit of cooperation and the knowledge that we're serving a common purpose that has been one of the most gratifying parts of serving on HASC to date. As Chairman McMahon, to the Rules Committee yesterday, we may disagree sometimes, but it doesn't mean we have to be disagreeable. We're able to put partisanship aside, and we know that our work directly impacts the life of each and every service member, his or her family, in a personal and direct way. We're providing for the common defense, which is part of the federal government's most fundamental roles, part of our core mission, as I like to say. And if you want proof of how collaboratively we worked on this bill as a committee, you only need to look at the fact that we passed this bill out of committee 59-2. And as a father of 3 sons serving in the Army, I'm heartened to know that politics can be set aside when it comes down to making sure our troops are equipped with the tools that are required, funded at the levels they need, and trained for the mission at hand. This is an important time for our country and an important time for those members of the military who serve us every day. These young men and women put their lives on the line for us, so we could be here today and debate the issues of the day. So they deserve our undivided attention and support when it comes to making sure that they have everything they need. And it's no more essential role for our federal government, in my opinion, as to what we're doing today. H.R. 1960 fulfills the promise to our warfighters and to their loved ones. I'm proud of this rule, which gets us on the road towards considering and passing this essential bill. For that reason, I support the rule, I support the underlying pieces of legislation, and I look forward to coming back here tomorrow in the next step of getting the National Defense Authorization Act for fiscal year 2014 passed. I encourage all my colleagues to vote yes on the rule, and I reserve the balance of my time.
Gentleman reserves the balance of his time. Gentleman from Massachusetts.
Thank you, Madam Speaker. I want to thank the gentleman from Florida, Mr. Nugent, for yielding me the customary 30 minutes. I ask unanimous consent to revise and extend my remarks, and I yield myself such time as I may consume.
Without objection, so ordered. Gentleman is recognized.
Madam Speaker, this should be a simple rule. Every year this House considers the annual National Defense Authorization Act. It's a bill that reauthorizes our nation's defense programs and a place where we should have the opportunity to debate some of the most important issues facing this country and the world. The process is typically broken up into 2 parts, a rule providing for general debate on the National Defense Authorization Act and a rule providing for consideration of amendments to do that to the bill. It's generally not a controversial process, although the decisions made by the Rules Committee in allowing and preventing amendments from being considered can be controversial. And that's where this rule goes wrong. This is not the normal rule providing for general debate for the Defense Authorization Bill. No, Madam Speaker, this rule is much more than that. Over the past 3 years, we've seen the Republican leadership in the House fixated on several things. They want to take health care away from millions of Americans by repealing Obamacare. They want to destroy the social safety net through mindless budget cuts. And they want to weaken our financial system by repealing the Dodd-Frank Act that came out of the greatest fiscal crisis since the Great Depression. This rule, the rule that should be a simple general debate rule for the Defense Authorization Act, also makes an order H.R. 1256, the Swap Jurisdiction Certainty Act. Not only does this rule cram in this controversial bill, it does not allow one single amendment. That's right. This is a closed rule. That's not an open and transparent process, certainly not the one that Speaker Boehner promised. H.R. 1256 would require the Commodity Futures Trading Commission and the Securities Exchange Commission to jointly issue rules on the regulations of swaps transactions between the United States and foreign entities. H.R. 1256 automatically exempts transactions in countries with the 9 largest swaps markets from U.S. regulations unless the CFTC and the SEC jointly determine that the regulations aren't broadly equivalent. Because many large U.S. financial institutions have subsidiaries outside of the United States, there are serious concerns that banks will seek to conduct swap transactions in countries with looser regulations to avoid U.S. oversight. And, Madam Speaker, it is important to note that many countries are far behind the United States in promulgating their rules on swaps. Why are we looking to allow foreign regulations to govern transactions involving U.S. companies that could ultimately impact our economy? During the markup in the Financial Services Committee, Ranking Members Maxine Waters offered an amendment to strike the presumption that foreign regulatory requirements satisfy U.S. swaps requirements, allowing the CFTC and the SEC to determine whether foreign regulatory requirements are comparable to U.S. requirements. Unfortunately, under this closed rule, the full House will not have the opportunity to consider a similar amendment to strengthen this legislation. Madam Speaker, this is yet another attempt to slow down the Dodd-Frank rulemaking process, undermine the CFTC's work in regulating derivatives trading, and weaken the financial market regulations needed to protect our economy. And, Madam Speaker, so I urge all my colleagues to vote no on this rule. This rule also allows, believe it or not, the Agriculture Committee to file a supplemental report to H.R. 1947, the Farm Bill Reauthorization. Madam Speaker, this is a bill that cuts $20.5 billion from SNAP, formerly known as food stamps. While this report is just technical and fulfills the committee's responsibilities following the markup of H.R. 1947, this rule is not the place for this report. And more importantly, I want to make it crystal clear that I do not support these egregious cuts. It's a rotten thing to do to poor people during this tough economic time. Finally, Madam Speaker, let me discuss the least controversial part of this rule, the Defense Authorization Bill. This rule allows the House to begin general debate on H.R. 1960, the FY 2014 National Defense Authorization Act. There is much to admire and support in this bill, and I commend the Chairman and Ranking Member for working together to ensure that the programs that provide benefits and support to our veterans and military retirees are adequately funded, and that there will be no increases in TRICARE fees. Regrettably, there is also a great deal in this bill that should make every member of this chamber pause and think about our national security priorities. Should we be spending additional billions on Cold War nuclear weapons rather than on our troops, their families, and our veterans? Should we really be cutting funds and putting obstacles in the way of implementing the new START treaty with Russia, limiting both our nation's ability to further reduce and verify our nuclear arsenals? Should we be committing hundreds of millions this year and billions of dollars in the future to an East Coast missile defense site that the Pentagon says it doesn't want and doesn't need? Should we continue to set up roadblocks and obstruct the President's efforts to resolve the issue of how to effectively and safely close the detention facilities at Guantanamo Naval Station, appropriately release and return to their families those prisoners who have been cleared of all charges, and bring to justice once and for all those few remaining prisoners who were indeed engaged in heinous acts of terrorism? And once again, Madam Speaker, the committee provides $85.8 billion for the war in Afghanistan through the Overseas Contingency Operations account. That's $5 billion more than what the President and the Pentagon asked for. Now, let me just say a couple of words about the OCO account. It is an off-budget account. It is another $85 billion on the nation's credit card. Deficit spending, pure and simple. It is the lingo of emergency spending, as if it were an unexpected surprise that we will still be in Afghanistan throughout all of FY 2014. I have always been concerned that the wars in Iraq and Afghanistan and the ever more amorphous and hard to define global war on terror have not been included in the Pentagon's base budget, but always outside that budget, with an emergency designation so that we don't have to figure out how to pay for it now. we'll just pay for it later and later and later. I'm increasingly concerned that even after we transition all combat military and security operations over to the Afghan government by the end of 2014, the OCO will still go on. It is time to phase out the OCO, put this spending back into the base spending bill, and if we want to make war, then we ought to figure out a way to pay for it or make the appropriate cuts in other Pentagon programs to make room for the funding of these operations. And finally, Mr. Speaker, let me say a few words about the strong concerns this Congress has on both sides of the aisle about the epidemic of sexual assault in all branches of our military. This bill includes several measures that will strengthen the investigation and prosecution of these heinous crimes inside our military. It also provides new protections for victims of military sexual assault. It reflects the bipartisan work of Representative Turner, my Massachusetts colleague, Representative Tsongas, as well as Representative Wolarski, Noam, Castro, and Loretta Sanchez. However, Mr. Speaker, there is still much more that should and can be done to ensure these brutal rapes and assaults are fully investigated and prosecuted, the victims treated with respect, and to advance prevention and education in our military academies and among our ranks and our officer corps. Several amendments were submitted to the Rules Committee, and I hope that they will be made in order so that we can have more fully debate this critical issue and how to end rape and sexual assault within our armed forces. And let me just add, Mr. Speaker, that while the NDAA looks to strengthen protections and prosecutions inside our military, we here in Congress are also to blame for having failed in our oversight responsibilities. Congress has not given the attention to military sexual assault that it deserves. So I think we do need to clean up our own house and ensure that Congress does a far better job of oversight to ensure that the Pentagon and all our military members are held accountable for preventing, reducing, and prosecuting cases of sexual assault and abuse in our armed forces, and providing victims with the services and support that they deserve. Mr. Speaker, I'm always ambivalent about the annual defense authorizations bill. I support the programs for our veterans and our retirees, and I support providing for the genuine needs of our servicemen and women, whether they are based here at home or abroad. But I cannot support the amount of waste, the spending on unnecessary and often ridiculous programs, on more nukes, on outdated weapons, and on wars that never end. As we begin general debate on the defense bill later today, I ask my colleagues to keep these questions in mind. Once again, Mr. Speaker, this rule is unnecessarily complicated and misguided. There is no reason to include yet another bill gutting Dodd-Frank in this rule, and there's no reason to cram into this rule a report from the Agriculture Committee about a bill that will make hunger worse in America. For these reasons, I oppose this rule, and I urge my colleagues to vote no on the rule for these three measures, and I reserve the balance of my time.
Gentleman reserves. The gentleman from Florida is recognized.
Mr. Speaker, I yield 2 minutes to the gentleman from Ohio, Mr. Turner.
Gentleman from Ohio is recognized for 2 minutes.
Thank you, Mr. Speaker. About 5 years ago in my community, we were saddened to hear of the news of the tragic death of Maria Lauterbach. Maria Lauterbach was a Marine who came forward to report the sexual assault that she had endured, and came forward and reported her belief of a subsequent pregnancy from that sexual assault, only to